All right, everything looking good. Should be live any moment now. Let me know in the chat when it's coming through loud and clear. In the meantime, welcome back to the channel. Crypto Trend Trader with our Sunday evening market update. A little look ahead, a little peekaboo at what's to come. It is 8 p.m. Eastern Standard Time on March 27th, 2022. Appreciate that, Eli. Good to see you guys. Triple dumps in the chat. Okay. I see you, triple dumps. I see what you're laying down. I'm picking it up. Okay. I see where you're at. I'm guessing that's a new name since, what is today? Sunday. So that was Friday's stream. So if I'm guessing, if we check that account, it's going to be less than 2 days old. Or I guess realistically, you could have just changed the name on your existing account, but that is freaking hilarious. That's how we know you're a veteran. And if you don't get the triple dumps reference, you didn't watch last week's video, and you're probably poor because you just missed out on some amazing trades. What's up, Asoto? Loud and clear. Good to see you, brother. March 27th, 2022. Obviously, just had a nice little pumpy. Big D's in the house. What's up, Big D? Let's go ahead and jump right in. We'll let the late arrivals kind of trickle in as they come, but obviously has some crazy volatility. We'll go ahead and start with crypto, obviously, since futures is opened up. We went all weekend with nothing. We were kind of anticipating a weekend pump, and the bulls just could not muster up the balls to do anything. And then about 2 hours ago, got a nice little push up, and no surprise, obviously was long Bitcoin. Took some profits already along the way, of course, because I'm not greedy, and you never know when these things are going to turn around. But also had quite a few nice altcoin trades as well. And if you've been watching the stream over the last few days, the group member requests, as well as the typical shit coins, altcoins, crypto charts that we take a look at, it's no surprise that we got this pump. We didn't need any news, didn't need any, crazy catalysts. We didn't have to run to the internet and search for articles of why we got the pumpy pump. Was it a Kamala Harris speech? Did old Camel Toe, throw a fuse talking about the passage of time and its significance? Or was this just based on the technicals? I'm inclined to say it's based on the technicals. And, if you go back and watch, pretty much Friday and Wednesday stream, you can see the exact trade setups that we're about to go over. And it's no surprise that, basically like the week or two before that, pot stocks were popping off, and those trade setups were beautiful. And before that, we had some miners popping off, and before that, we had commodities popping off. We've been really ahead of this thing for a while. We got out of the way of the big dumps last year. We got positioned for all these, nice pumps so far this year. A combination of actual pumps and the couple of bull trends that are actually in place. Now, it is important to pay attention to the fact that the majority of these markets are still technically neutral or bearish. We are starting to reclaim some key levels though. But let's go ahead and actually take a look at crypto, and we'll talk a little bit more about these. Oh no, dear God, how annoying is that? Well, no crypto tonight, guys. Sorry about that. Oh man, what a blunder. Yeah, I guess we'll just call this stream and we'll just pick up on Wednesday. I think that was a sign. Oh man. How fucking annoying is that? I can't get a hey, are you sure? There's no notification comes up. It's not like I'm looking at porn. I'm trying to close the window real quick before my wife walks in. It's goddamn crypto charts. I'm gonna warning before it goes away. Ah, motherfucker. Pardon my French. Motherfucker. That was better. Yeah, just give me a minute. I just gotta reload, like, you know, whatever it was, like 12 charts or whatever. I don't even remember what cryptos they were now either. God damn it. How annoying is that shit? I'll tell you right now, it's real annoying. Real fucking annoying. It wasn't meant to be. I guess we're not looking at crypto. So cue the crypto dump. I'm sure it's going to go down 30% now while I'm reloading these charts. It was a sign for sure. Man, there was a bunch of like random shit coins on there too that you guys have been having me look at lately. And honestly, I don't think I could guess them. Most of them I probably never even heard of. So, man, let me try to think of what they were as I load these up. All right, so I have, let me know if anybody remembers what they were, but I have so far the Bitcoin futures chart, the regular Bitcoin Bitstamp chart, Ethereum, we've got Bitcoin dominance. We've got total market cap. Okay, total market cap, Bitcoin dominance. All right, now we got to really just start thinking here. So we got Avalanche. We got Solana. And after that, it's pretty much up to you guys. Matic, I know I had. Man, what a freaking blunder. I can't believe that. I mean, I'm sure it could be worse. But still very, very annoying. A lot of these we had like trade setups for, and I don't even remember what chart we were looking at either. Man. Yeah, I mean, a lot of these we're just not going to have the setups if I can't think of what they were or what exchange we were on. Oh man, after that it was like crazy random S coins I've never even heard of. What, Flux was one of them? Flux was one. Um, Luna. I don't remember. Was that on Binance? I think Luna was pretty much hanging out at the all-time highs, so I'm not even sure that we had like a nice setup or anything on that one. Come on, what is going on here? How annoying is that? Eli, appreciate you, man. Uh-oh. Just rewind a bit and check the tabs before you close them. Here are a few. Appreciate that, dude. Thank you for putting in the work. So I've got Bitcoin dominance, Avalanche, Solana, Matic, Flux. So I need Algo, KNC, and STX. Of course, now I'm having freaking troubles with TradingView. I don't know what's going on. It's like forever loading. Damn it. Cue the dump. Yeah, I don't know. I don't know what's going on. The last couple like aren't even loading. TradingView's just like taking a shit. Get my windows all perfect. Beautiful, beautiful setup. Oh yeah. Yeah, to the right. Okay. So you guys want to do some actual TA? You want to look at some cryptos? You want to do what we came here to do? I say we do it. And hopefully by the time we get there, those last couple will be loading up. I don't know what's going on. Coinbase or TradingView's having some little issues as well. So hopefully I got them all on there. The last couple like don't seem to want to load, so I don't know what the hell's going on with them. TradingView might need a little break. But sorry about that. Damn. Oh God, sorry about that. Damn. I like went to click the mute button and coughed and missed it. All right, so let's go ahead and jump right in here. And by jump right in, I mean finally get started. Okay, so let's look at our Bitcoin futures chart and see what's going on here. So obviously we've been paying attention to this downward trend, oscillating around inside this range. I'm on the daily right now. We were speaking about this with our close on Friday about how we came up to 200 exponential and actually flipped it back over positive. 200 simple already flipped back over positive. Most important thing for me is we haven't gotten a false signal from the futures chart yet. Here, 200 exponential, flip negative. 200 simple stay positive the whole time. Here we saw like little signs of like, potential bear market entrance. And then we went into a bear market. And then we came up and, retested it. But here we actually flipped back over for the first time, the 200 exponential. We also spoke about the divergence. So we were able to call out, divergence, bearish divergence here, on the micro between these points. And then we were able to call out, goddamn, TradingView. We were able to call out bullish divergence right here from these points. And then again, we called out bearish divergence here between these points. And then also on the macro between those points. And then we spoke about this in advance, how I didn't want to rule out the potential that we were going to print bullish divergence here between this point and this point. And that's exactly what we did. We printed bullish divergence on, if we go to the weekly time frame. I guess I'll just switch over to it real quick, so you don't have to like imagine this in your heads. That is why we have screen share on. So we had obviously bearish divergence on the macro here, and then bullish divergence on the macro here. So now that we have that, bullish divergence, I was basically talking about, look, if we come back down to this point and we confirm a higher low, this is going to print bullish divergence, and there's no reason to think the same way that this sent us all the way down to our lows, that this can't send us back up near the highs. Now, obviously, we got the bullish cross. On the weekly, the last time we were already above the 8 and 21 cross. Here, it's been a lot more laggy. It's been a lot weaker. But, multiple green histograms, bullish cross, very close now. That close was above the 21, and we were talking about that ahead of time. We said back here, we were constantly getting rejected by the 8. We need a close above the 8. That would be the first time. Then after that, a close above the 21. That's our last 2 weekly candles. So none of this should be a surprise to anyone. And I mean, how many bearish setups have we been sharing on the channel over the last couple weeks? None. It's all been bullish setups. Was I ambitious that they were going to play out? I mean, like always, I always like hope for the best, but, expect the worst. So that's why we use stop losses, position size, risk management, etc., in case we are wrong. But the fact of the matter is, we've specifically been talking about how, look, we're bullish when we're supposed to be bullish. We're bearish when we're supposed to be bearish. Sometimes our opinion doesn't match up with the technical analysis. Still share our opinion, but the truth is, it's up to the charts. It's up to the technicals. It's up to the market makers. And in this case, things look bullish. We took out these highs right here. And now, okay, I want to talk about something else we spoke about recently too. We're talking about the retracement and how this could be the bounce back up and then we go lower. But there was potential for a higher target up to at least like the 0.5 of the retracement. Is it on the futures or the regular chart? I can't remember. Okay, yeah, all right. Again, don't mind all the red and green and all that. We can talk a little bit about it. But basically, what it comes down to is, this is what we've been discussing, was the potential of a higher B wave back up to what would have been the 1.5 Fibonacci extension. But if we just draw in the internal retracement of the fib, this is the 0.5 fib. That's the 618 fib, slightly higher. So we pushed up, we pumped up, we gapped up above the 200 exponential and simple, back to the 0.5 internal retracement fib. The 618 internal retracement fib is 52,150. And then we have some other like key resistances, supports, etc. Along the way as well. Obviously, this chart is getting a little bit on the busy side. But the most important thing to remember is, we just trust the charts. Now, what I do want to focus on is what happened back here, where we confirmed bullish. We actually managed to completely flip the 200 exponential and simple back bullish right here. And then we started to have a sell-off, but we didn't get the false alarm from the 200 simple. And then we crossed them back to the upside. It was bullish. And then we crossed back down and lost them right before that Rona dump, right before the complete meltdown. And that was when we had confirmed bullish, and we were bullish again on the markets. And then we came down here, we got the 821 cross. Things started looking a little sketchy. And then obviously we gapped down, it gave us a little bit of a notice on the spot market. But as soon as we closed back down below here, and all of a sudden the slope just immediately flipped negative, told us get out at 8,000, and then we lost 50%, in like 3 or 4 days. And that was nobody could have expected that to happen. That was a black swan event. Well, apparently moving averages and my strategy is able to spot black swan events before they happen. So probably worth paying attention to. So what's happening right now, we're confirming back into that bull market and getting that push back up. So what we need to pay attention to is there a possibility that we still get another one of those events? What is it? Is it war with Russia? Is it food shortages? Is it stock market crash? Is it, Santa Claus is real? I mean, oh man, if you're watching this with your kids, like, sorry about that. You know what I mean though. I mean, let's be real. We don't know what the black swan's going to be, but there's definitely ways to see this stuff coming in advance. I mean, it's not like people are always like, oh, nobody could have seen that coming. It's like, really? You couldn't have seen that coming? Like, I mean, some of us did. So we see this cross into the upside right now. We have to be bullishly biased now. I mean, we have to. We have to trust the strategy right up until we don't. And it's possible that we'll be wrong, the same way that most of the time we're right. Sometimes we're going to be wrong. So if we enter into these trades and we end up in a trade and then it does sell off and we're wrong, or we took profits too early and it keeps running, we can add into momentum. If it rolls back over and goes down, we get chopped up a little bit. But the fact of the matter is we have to trust the process. We have to. And so the same way that when we were bullish right here, and then we went bearish right here, right before the Rona dump, and then we went bullish right here again, and then we went bearish right here, we have to trust this signature right here. We have to. We can take our time. We can wait a couple weeks. We can buy in higher. We can doubt it. We can do whatever we want. But the fact of the matter is, if we're going to have a system, we've got to trust that system. We have to stick to that system. So that's how I look at it. So what did I do? I did a circle. That just doesn't seem right to me. I don't know why. I just have to have like some awkward, strange ellipse. I don't know, what the significance is, but we got to just use that. And what did I do the last one on here? Blue? Yeah, okay. So, I mean, we have to trust the signal. Could it roll back over and sell off? It could. Are we going to take some profits along the way and then add into momentum as we break through key levels? For sure. But we have to trust this signal. We really do. And does this change anything on my macro view? No, not at all. Because we break down here, we hit our target. We have this target in place way before we ever came to it. We hit it perfectly with a wick to a T, as if we were the whales, the market makers. As if we were in charge of these markets. We literally picked that area out as our bottom. Not by chance. not by luck, using technicals. And then when we bounce that area, we identified a potential top. Now, this top is not supposed to be to the T because we have a measure move breakout, which is basically like, from the neckline, double bottom right here. We have our Fibonacci levels. And there's multiple different Fibonacci levels that we need to take into account as well. So it's not just that one. I have them drawn on different charts just so it's not like overwhelming. But we have one from the bottom here at like 30K up to the top. And that has a couple levels identified. And that would be the retracement of, the move from bottom to top. And then we also have the retracement from top to bottom. So we have to trust these Fibonacci's. We have to identify these areas and see what's being interacted with based on price action. And we can see key levels. When I turn that off and then we look back, we can see we've been consolidating at this 0.5 level. And that 0.5 level on this chart right here is from the bottom of the 30K dump up to the top at 70K. So this is the fib that's all the way on the right here. And that's exactly where we were hung up at, which was the top of the quote-unquote ascending triangle that we were looking at. And we'll see that when we switch over to our Bitstamp chart. This was the resistance of the ascending triangle, which is exactly where we closed at. And what do we know about resistance? We tap it once, we hit our head on the ceiling, we hit our head on the ceiling, we hit our head on the ceiling. Every time we hit our head, the probability of us breaking through becomes higher. And while we're consistently putting in higher lows, that's technically a bullish pattern. This is an ascending triangle is a bullish pattern. Higher lows and the same high. We're eating through sell orders. Every time we get to it, there's less and less and less sell orders. And then finally people are like, oh man, I don't want to sell here. Looks like it's about to break out. And they start pulling those sell orders. So then there's momentum. There's less sell orders because people are buying them. And then people are pulling them because they're starting to get bullish. And then we get the breakthrough. And that's basically what we saw, right before futures open up. So now we have a gap up above the 200 exponential and simple. Now, it's also important to notice that when we're looking at these patterns, and we were specifically talking about this on the last stream or maybe 2 streams ago. Man, this chart is so busy. I think I'm going to use the other stream and we'll go look at that one or the other chart. So we see what's going on here. We have momentum based on the slope line. We're above the 0 line. We have all green histograms. We have a hard buy signal. Buy, sell, buy. That's our divergence signal, the bullish divergence signal. We also have a cross to the upside. I mean, I said it last stream specifically. We have to trust the indicators. We cannot let our bias, or whatever we think is going to happen, dominate our trades. We have to either trade technically or trade with our hearts. And I'm going to tell you right now, nobody goes broke trading technically and sticking to the plan. Well, I shouldn't say nobody. If you have a shitty plan or you don't know anything about technicals, sure, you can go broke. But you think more people go broke trading with their heart, buying Dogecoin, because Elon Musk is about to be on Saturday Night Live? Or do you think more people go broke trusting moving average strategies and bullish and bearish divergence and indicator oscillator strength and weakness? I would say probably the heart guy. I'd say probably the heart guy. So, yeah, let's switch over to the Bitstamp spot chart, and then we'll go from there. So, all right, so here's our spot chart. Obviously, we were stuck here at the 200 exponential. Once again, flipping it over potentially on that last candle. So we have to be bullish at that point in time. Now, granted, we're still under the 200 simple, so we could easily get rejected and this could roll over, or we could chop around here for a little bit. But, we found slope perfectly over and over again on the slope line. And, found support rather. That's what we want to see. Broke above the 0 line, took out the previous highs right here. So there's no chance of bearish divergence now on the daily time frame. We're up here in the bullish control zone. Now we are at very high levels for sure. Invalidated any potential bearish divergence. I mean, this looks juicy. More likely than not, I think we hit our target, 48,359. I think we're headed up there to retest the 200 simple moving average. So what is this? This is our reversion to the mean, right? We broke down below the 200 exponential and simple. We attempted to get up to it, couldn't make it. Attempted to get up to it, couldn't make it. And then finally, we make it. Well, almost. We made it to 200 exponential at least. Now, is it because they're coming down? Is it because we're pushing up higher? Is it a combination of the two? Yes, correct. So now here is our ascending triangle. Now look, this is typically when we're breaking down the direction of the leg, or the lead-in move as it's called, will have bias to the actual pattern. And then the pattern itself also has bias, typically in line with the lead-in. But in this case, we have a bearish lead-in, but we have a bullish pattern, which was why I was saying, it might have been in the group specifically. I think I mentioned it on stream last week as well. I honestly can't remember. But this is why I was talking about rather than a triangle, because people were calling this a triangle, like a non-biased triangle, or they were calling it an ascending triangle, which it looked like at the time. But what I was calling it was a bear pennant. And what a bear pennant is, I'm going to go ahead and delete this, or I kind of want to leave it on there. Let me just make it like really, is that better? Man, there's so many fibs on here. I know this chart is like super messy. I hope you guys can still make it out. If one of the lines that you want to see but you can't is like not visible enough, let me know and I will make it more clear. Ignore this random red line up here also. But what we want to pay attention to now is I drew in this green ascending support line here at the bottom. Now there's multiple ways you could have drawn that in. Let's actually go ahead and transition that to what I was saying last time. And I really thought I drew it in. I might have just drew it in the, might have been on the group chart. I can't remember. But now we have this ascending support line, which arguably could go from here to here, or it could go, slightly lower and tag this one perfectly. But now if we move that up to the top of the range, either based on wicks or based on candle closes, now we have what is more likely to be a bearish pattern. It's more likely to play out because we have now a, this is a bearish pattern. A lead in followed by an ascending channel and then a breakdown of that channel and continuation in the direction of that trend. An ascending triangle is a bullish pattern. So more likely than not, that's going to break out bullish, but we're coming in a bearish downtrend. So like if we have a 66% chance it goes down because it's bearish, and then we have a 66% chance it breaks out to the upside because it's bullish, where does that put us? Like it's right back at like 50-50. Could go either way. So it's more likely to me that that is not the correct pattern that is going to play out. The same way a lot of times people will identify, like at the top of the bull trend, that we had a symmetrical triangle. And I was like, I don't think that's going to happen. I think it's going to end up looking like the symmetrical triangle, breaking down from the symmetrical triangle, revisiting the lows, and then turn into a descending triangle and then break down from there. That's exactly what happened. And that's what it looks like is happening right now as well. We had this what started off as a symmetrical triangle, then it turns into, an ascending triangle, and then in all actuality, the real pattern eventually develops itself. And in my opinion, the real pattern is going to be this channel. So we have now 5 or 6 very clear supports right here, another 2 right here, and then one little like fake breakout right here. And you'll remember what I was saying at that bottom, at that support line. Now is not the time to get bearish. This is exactly what it looks like to trap people in trade, because just a revisit to the top of the range at the time when I was saying it was over 20% move. So I say, if you're thinking about selling right now, you're selling me your crypto because I'm buying. I'm buying support and selling resistance. And I did. I took some profit on my trade. It was up almost 20% at this resistance line because that's just what I do. It's part of my rules with anticipation that the price would go higher. So now my next target to the upside just so happens to be this ascending top of the channel, which we only have 1 touch on it. So technically we want to have at least 2. 3 is more reliable, but a lot of times on the 3rd touch it breaks. But the bottom is so reliable right here because we have this beautiful touch, and then we just have candle after candle after candle after candle, a push away, candle, candle, pump, come all the way back down, candle after candle, candle after candle, and then a little fake out breakout, and then we start rising to the upside. So I actually give this a pretty strong, reliability as far as support and resistance goes. I like how this looks. I also like that we tagged the heart line right here pretty perfectly and got rejected. We tagged the heart line right here perfectly and got rejected. And this is the daily close on the Bitstamp chart. So it seems pretty reliable to me. And now here we have, this resistance, that red box. What are those for? Oh, those are our targets. Hang on a minute. So we're about to hit our next target, which just so happens to be right here at the 0.5. It also happens to be at the 200 simple. It also happens to be at the top of the channel. So in all reality, is this target incorrect? Well, I was anticipating where the 200 simple moving average was going to be at the time. In all reality, the target should probably be, this time left and right doesn't matter. The target should probably be in between the 0.5 and the 200 simple. But remember, we drew this, I don't even know how many months ago. It was like when we were back in this range or something, when we confirmed the bottom, and then we tagged the 236. So it would have been around here, like, February 1st was when we tagged that and confirmed that this was probably a local bottom by the 236. So that was back in February. We've been anticipating this target. We fell short of it. And now here we are, we're at it. And then we know our next target to the upside is the 618, like I was just talking about on the futures market. Now, granted, the targets will be slightly off on futures and spot because of wicks, because of, liquidity, different exchanges will be slightly off. So that's why we draw these boxes and we don't pick exact lines that it has to get rejected on exactly. We'll basically pick like a small range. And then within that range, we'll take sell targets, buy targets, etc. So here we've tagged that 0.5 level. So there's very high likelihood this is it, that we're going to top out right here. Now, are we going to get this close without touching the 200 simple? Without completing that algo, without the bots getting their nut? I doubt it. I think we could easily push up another $900. I mean, what's $900 amongst friends? It's nothing, right? Now, once we get there, we probably cool back off. And then eventually we come back down. We probably retest the breakout level, 44,709. So that is our, basically breakout, consolidation, a retest. So a break, retest, and then continuation if that holds as support. Now, is it possible that this is Wyckoff redistribution taking place? And we had distribution taking place, breakdown from distribution, and then we have last point of supply somewhere up in this range where we basically, consolidate around. There's a bunch of selling. We break out bullishly to the upside. This is our throw over. The same way this tiny little thing was our spring. We broke down from an ascending support line. People thought, that's it, it's going lower. And they start shorting and they literally sell the bottom. The same way that people are buying the top, whether it's based on stop losses. I mean, let's be real. This isn't organic buying taking place. This is not manipulation taking place. This is not some news on the internet. This is not some, fantasy pump. This is not luck. This is not chance. I mean, this is literally a technical breakout of a resistance level that lines up perfectly with the Fibonacci. And where are people going to put their stop losses at? Well, if we just, we're right here and, sold into that and then it went lower. Here, sold into that and went lower. People are going to have short positions right here. Or if they were already short, at this range, they're going to have their stop loss slightly above it. So depending where those stop losses are, as soon as we break through them and all of a sudden people start closing their shorts or algorithms start closing their shorts because they're like, oh, I was wrong about the short. Close my position. What do you do to close a short position? You buy. So whether it's you, whether it's an algorithm, whether you're getting liquidated, whether it's people buying the breakout, whatever, regardless, this is forced buying on a technical breakout. Technical breakout of a Fibonacci and a bullish pattern. So now we run up to the next key level, consolidate here, and then we reevaluate. So are we going to get the SR flip right here? What was resistance going to turn into support if we come back down and retest it? Did we already top out? Do we go higher? We have to wait and see. We don't know. But we've had these targets in place. I mean, this is not a surprise. We could even go higher than that. But we know for sure this could easily come all the way back up to somewhere in between 52 and 54,000. And it does not even begin to change the narrative that this is still the ABC of our macro top. So, we'll see. We don't want to get too bullish. We don't want to get too bearish. But we know now we're starting to confirm some of the bullishness that we needed to see off of weekly bullish divergence. So again, we don't want to let our bias get in the way. So even if we still have targets lower than 30K, does not mean we don't go back up here. And, I don't want to be FOMOing in at 52,000 at the top. So that's why we take some little positions along the way. See what happens. And the 4 hour, I did something I never do on the streams here. And we went down to the 4 hour time frame. And we specifically talked about these two failed breakouts on the 4 hour. And then I told you guys, I took a position on the retest, on the 821 cross, you know, anticipating higher prices because I have to. The 200 exponential and simple cross back over bullish. I have to. So I'll look for the same thing I did previously, where I'll look for bearish divergence or weakness. If we start to see 2 red histograms, if we start to break down from key levels, if we see bearish divergence, you know, whatever it is, you know, I will take profits along the way at key support. But I mean, I just stick to the strategy. So I don't have to be right if the strategy is right. And I think that's the most important thing. So, you know, everybody else is rushing out and, you know, going live and Bitcoin breakout. This is it, the big one. I knew it. Well, if you're just always bullish, did you really know anything? If you're just always bearish, did you really know anything? Or are you just always bullish and always bearish? And there's only 2 directions. So if you're always bullish long enough, eventually you're right. If you're always bearish long enough, eventually you're right. It's just for how long it lasts and are you reliable? Me personally, I just stick with the charts, man. I mean, we talked about it so many times. You know, I just translate the charts. Charts speak a different language. Not many people speak that language. We just so happen to be fluent in technical analysis. So we get on here, listen to what the markets are saying, and then we act accordingly. You know, so, you know, most of the time, with the exception of, you know, the swearing, the cussing, you know, the horrible analogies, the politically incorrect statements, with the exception of those things, that's me, but the rest is the market. You know, the actual technicals and everything, that's the market speaking. It's just use my voice. So no surprises here. You know, we're knocking our head on some other key levels. We're looking for some more continuation. We're expecting, obviously, resistance at these various points along the way, you know, but we're trusting in the technicals. You know, this is a very high likelihood area that we top out. Now, just because we top out at 48K doesn't mean we don't wick all the way up to 52K, put in a massive rejection from 52K back down to 40, you know, 8K. And then it's like, oh, that was the top. And now we're going back down. Even if we go back down, doesn't mean we're going to break back out the bottom. Maybe we just put in another higher low and then we come all the way back up and put in a higher high. But the fact of the matter is, this is a bearish pattern. We have a bearish lead in now, and now we have a bearish ascending, you know, consolidation. Sort of like the opposite of what gold is doing right now. Gold was doing the opposite. It basically double topped, and then it was coming back down in, you know, imagine this was a double bottom. Flip this chart over. This is a bottom, that's a bottom, and then we come back down, you know, so this is like the equivalence of the top. And then when we hit the top, we start putting in an ascending channel. Well, that's like the descending channel on gold right now. And then eventually we get the breakout to the upside on the gold channel, or we get the ascending channel to the upside and then the breakout to the bottom in continuation. So basically gold and Bitcoin literally have, you know, the exact same chart, but opposite right now. Both at the top of a pretty nice uptrend, obviously, but, you know, it's worth paying attention to and seeing the similarities without bias. Because I guarantee you, if I show people that are bullish on Bitcoin the gold chart, they'll say one thing. And then if I'm like, oh, gotcha, that's actually the Bitcoin chart. And they're like, oh, I didn't mean it. Wait, no, that's because the Michael Saylor. I mean, it shouldn't matter what ticker you're looking at. That's removing your bias and just looking at what the chart is actually telling you. So right now, we have to trust the chart right now. We have to trust all the things they're pointing out. Now, it doesn't mean we don't come back up here and put in bearish divergence again with either a lower high or a higher high, and we get a third drive of bearish divergence. Does not mean that. Does not mean we don't go lower. But right now, we have to trust what the chart is telling us. And remember what our criteria was to start getting bullish. We close back above the 8. We close above the 21. The 821 cross back to the upside. We get the hard buy signal. We get multiple green histograms. All those things are happening. So we have to be bullish. We have to trust the system. So that's what we have going on right now. Now, that being said, let's look back at what happened during previous cycles. Well, this was our last 2 significant times where we were bearish, and then we actually broke out of that bearish trend. So here we were bearish, we broke back up and almost crossed 821 to the upside and then got rejected. Here we were bearish, we almost crossed 821 back to the upside and got rejected. And then eventually broke down 50%. We're not quite this bearish. Never quite got that bearish. Here was that 14,000 top, got rejected, came down here, broke down, came back up, reclaimed the trend, flipped the 821 back to the upside. Everyone got extremely, extremely bullish right here. And this was right before the Rona dump. And you guys will remember, I was talking about, you know, this doesn't look good. Looks like we're about to capitulate here. I know a lot of you guys came since then, but as soon as we confirmed the 821 cross or the breakdown on the 200s on the daily, this looked extremely bad. And it just so happened to coincide with a rejection of the slope line on the weekly TJD TDMACD, which this is a very common thing we see happen here. I talk about this all the time, and you guys know that. When we have a blue slope line, we break down below the blue slope line, but it stays blue. We come back up, we get rejected, go lower, come back up, make it almost all the way back up to the slope line, get rejected again, and then it flips red. That is one of the most reliable bearish signals you can get, and the same way it's bullish if it's flipped the exact opposite. So we have to be careful. We saw a similar situation here. We broke down, lost the slope, came back up, pushed up above it, and then it broke back down and got bearish. But we put in a new high and printed a bunch of weekly bearish divergence. Here we have lost the slope red and we're coming back up to it. So we have to see when we get back to it, can we confirm back above it? Can we flip the slope back over in our favor? We don't know what's going to happen. But we know what to expect, potentially bullish or potentially bearish based on these things. And now let's just look at one more time frame. I want to look at the monthly because we only have a couple days left in this month. 4 days now left in this month. And remember what we've been talking about this whole time. We're basically range bound until we close a monthly above 45,675 or below 38,000. So from 38,000 to, let's say, just round it off, 46,000 is our range. Well, we're slightly outside of that right now with only 4 days left to go. We're like $1,000 ahead of that. So maybe things are looking good. Maybe we close back above it, we rally back up and see continuation. But again, we also saw something like this where we found support, came back up, got rejected, chopped around a little longer, and then went lower. And that could very easily happen if we sell off $1,000 in the next 4 days or whatever, consolidate here a little longer, stay inside this range, and then eventually we can break down the same way that we could break out. So until we close outside of this range, either to the upside or to the downside, and even then, we closed above that range and then it sold off. So we have to use the shorter time frames. But we still have all red monthly histograms. We still have a bearish cross and acceleration to the downside. I mean, we tried to have a push up right here and it got rejected, and we're actually accelerating to the downside. If you look at these two trend lines right here, they're actually diverging. Here they were tighter, they were closer together, they were like a toiga. And now here they're getting further and further away. So the trend is actually accelerating to the downside, even though it looks like it's going up over the last 2 months because it had a little bounce. So we don't want to get overly bullish. We don't want to get overly bearish, but we have clear criteria laid out when we stop being bullish and go back to being bearish, or when we stop being bearish and go back to being bullish. And we do it in steps. We don't just do it like a light switch where we just say, okay, now we're all of a sudden bullish from here on out. Okay, now all of a sudden we're automatically bearish from here on out. No, we do it in little steps. We take little baby steps. You know what I mean? We take a couple steps and then we just kind of lean on the table. All right. We're like, oh, these leg things, they're crazy. I mean, anybody ever seen a baby walk? The baby doesn't just go from not walking at all to just completely like walking and skipping and hopping, and like two-stepping or whatever the cool dance moves are these days. No, it takes little baby steps. It takes a couple steps and then just consolidates on something it can lean on, or, lays back, drops back down to the ground, gets back up, does it again. That's what we're doing. We're just taking some baby steps. Taking a little nibble on these markets. We're making a little bit of fun money in the meantime on some of these quick little scalp trades that could turn into positional trades. We're taking profits along the way. We're still expecting rejections, until we start confirming back above. Like for me, I mean, the only thing really left on this chart on the daily that could be more bullish is just a close above 48,000. Just get back above that 200 sample, baby. Just consolidate up there and just show the market who's boss, and we can be bullish again. We all get in the Lambos. We ride them to the airport. We get on the plane. The plane takes us to the rocket. We get on the rocket. The rocket takes us to the Citadel. The door on the Citadel opens up. It's a giant spaceship. It looks like Peter Schiff. It's made out of solid gold. And then we all fly to Mars, and we live in the Bitcoin Citadel on Mars with Elon and, the Dojians, the aliens that created Dogecoin. Right? I mean, that's the plan, isn't it? But, in order for that to happen, first step is, we got to walk out to the car and get in the Lambo. So we're on our way. We're on our way to the Citadel, but still got a little ways to go. All right, so that's it for Bitcoin. Obviously, I've taken a look at that. It was no surprise seeing what was going on here. It was a pleasant surprise, but it wasn't a surprise. It wasn't like, oh shit, this is crazy. Like we were kind of expecting it. We were just a little pessimistic because Bitcoin bulls are little bitches lately. They're total puss. So Ethereum, what do we have trade setups on? I don't even know what's going on. Okay, so we have the Ethereum trade set up. It was like a 20% with a 3-to-1 risk reward ratio. It's already like over halfway there, consolidating between the 200 exponential and simple. 200 simple is still bearish. Ethereum still looking kind of weak. Looks better than some, worse than most. But it stayed bullish longer than most too. So a lot of people are probably trapped substantially upside down in Ethereum. Total crypto market cap looks a lot like Ethereum. Slightly less good than bullish, than Bitcoin rather. Just doing the same thing basically. Same exact. The crypto market cap is literally the Bitcoin chart. I don't even know why they have two separate charts because all the altcoins added up together just equal the same thing in comparison to Bitcoin. Bitcoin dominance. And keep in mind, that was on the weekly we were just looking at. This is on the weekly as well. This is exactly what we were discussing. Coming up towards the end of the week, we come back down here. We retest the trend. We've already confirmed the 821 cross on the weekly chart to the upside. So we come down, we get rejected, we close back above it, and then Bitcoin is bullish. And what do we need for Bitcoin to be bullish? Well, Bitcoin has to go up faster than altcoins, or Bitcoin has to go down slower than altcoins, or Bitcoin goes up, altcoins do nothing, or Bitcoin goes nowhere and altcoins go down. Well, which of those scenarios ever happens? Whenever Bitcoin goes up, altcoins go up faster. Whenever Bitcoin goes down, altcoins go down either the same or faster. So in all reality, if I'm right about this, and we're coming up here to test 45, Bitcoin is either going to have a massive breakout and the shitcoins are just going to get left behind because no one cares about them and they're all trash. What's that little like star where it's like, and then footnote at the bottom of the page and it's like full disclosure, not all altcoins are trash. 1 in 1,000 altcoins is not a total piece of garbage trash. Trashity trash garbage shit, and then back to what we were talking about. So, full disclosure, there's a small, tiny little asterisk star, and then reference the bottom of the page where not all altcoins are trash, just 99% of them. Or the alternative situation is right here that all of a sudden, this is a throwover. This is Wyckoff distribution, or what we like to refer to as redistribution, a fake breakout or a false breakout or a stop hunt or a liquidity hunt based by the whales, by the market makers, and then we're actually about to see our C wave develop, and we're going to go down below 30,000, which I'm still inclined to believe, but I could be wrong, and I'm okay with that, because even though I'm bearish and still believe we're going to go down, I'm actually bullish in the markets, and I'm in Bitcoin positions and some other random shit coins as well. So realistically, if we push up to right here, it probably means we're going down, and the shit coins are bleeding out faster than Bitcoin. So we have momentum in our favor. We're above the zero line. We have all green histograms. We're approaching the bullish control zone. We have the 821 crossing to the upside. Only thing not bullish on this chart is we're well below the 200 exponential and simple. We also know the 200 simple is basically flat right now. It's basically flat. Now, technically, the 200 exponential is still closing down towards the 200 simple, so it means that the 200 exponential is actually accelerating to the downside. If it crosses below the 200 simple on the weekly, it actually looks like we probably go lower. So we'll have to see. But my target to upside 45, then we have the measure move, then we have the potential retest of 200 exponential and simple, come back in, put a higher low, triple bullish divergence on the weekly, and then eventually, full on crypto bear market. But we'll see. It does not have to happen. So AVAX at the resistance basically did nothing because it was already at resistance. That's why there was no trade set up for this. This has literally done nothing for so long. In the event that it actually is about to break out, and when I say so long, I mean it's been like a week or two. But it's already at resistance, so there's nowhere to go without a technical confirmed breakout, which it's not doing. Everything else is doing it, but AVAX is not. So we'll have to see. But we know our next target to the upside is the 382 at $98. About 10%, not bad, not bad. Work getting out of bed for 10%? Probably not. Probably not. Next target after that would be the internal retracement 236 at 115. We start looking at measure moves. We could start looking at some other various things as well. But yeah, that's probably the worst crypto to trade right now, honestly. Well, I shouldn't say the worst. So Solana, man, I don't know. Do we have a chart for this already or no? Still technically in a bear market. This is the weakest crypto in all of the existence. Of all the cryptos, this is the worst one. But it also had a ridiculous, run leading up to it. So now that it's in a bearish daily, trend, well, yeah, of course it is. I mean, it was $258 and now it's $100. It's down like 60%. People hate this coin now because they bought it on the way up thinking this was going to change the world. And then it's like crashed. They've like got hacked. There was issues. There was somebody exploiting the system. It went down for a couple of days. They minted a bunch of coins and then just replaced the ones that got stolen. Like, I mean, this is total garbage, right? It was supposed to be the future. You were supposed to be the chosen one. I mean, this is like the Anakin Skywalker of cryptocurrencies, right? It's like the Ethereum of Ethereum killers. I mean, it's garbage. I mean, maybe in the future it'll be great, but everything you were supposed to believe about Solana failed. I mean, it broke down. It got hacked. They minted new coins and just replaced the ones that got stolen. Like that. I mean, is that not exactly what Ethereum did? So how is this thing to kill Ethereum? It sounds more like a clone of Ethereum. It's just like the newer version of the same piece of shit. But I mean, I don't know. Maybe it'll be awesome. In the meantime, at resistance, we have a top right here, a top right here, a top right here. The test up to 200 exponential would be 113.76. 200 simple on the daily would be 151. This thing looks like trash. We do have the slope still in our favor. Bullish. We're well inside the bullish control zone, and it has gone nowhere. Okay? Printing some potential bearish divergence on the knife right here as well. Higher high, lower high. Does not look good. Does not look good. Solana is like, I don't even know. I mean, I don't want to make it too harsh. I don't want to call it like the new XRP, but it's not good. There's a good possibility. Keep in mind that a couple of these things that ran super hard this bull run, especially late bloomers, never hit a new all-time high again, ever again. There's a possibility of that. And I think, for each one of these, let's say we look at 10 of them, I'd say probably 7 of them never hit their all-time high again. Not after the whole next bear market, into the bull market. Everything else makes new all-time highs. Even Dogecoin puts in all-time highs. Okay? But some of these ones, and maybe Solana's going to be one. I don't know. I don't know what the biggest losers will be of the next bull run. I don't know who the new XRPs are going to be. I don't know who the new Dashes are going to be. I don't know who the new BitConnects are going to be. I mean, I could point a couple out and tell you probably, but I mean, who knows? I mean, Cardano put in an all-time high this year, and it probably doesn't ever do it again. Now that Charles Hoskinson has been exposed for the lying little bitch that he is, now that Cardano has, failed over and over again to deliver. I mean, it's $1. We got out at what, like $3? Bought into Cardano beads at I think it was like 7 cents or something like that. That thing's trash. It's a trash project. It's garbage. Can't even believe we made as much money off it as we did. So let's keep rolling. So we got Matic next. Matic. Well, actually, have an open trade on this, don't we? Yeah. All right, so Matic, we got the breakout of the descending wedge. Excuse me. Damn, let me clear my throat real quick. Yeah, hopefully that's a little better. Retest the 200 exponential on simple, consolidating at that range for now. We had a nice setup in play with 12% stop loss if we broke out the bottom of the range. With a 45% upside target. Already have moved our stop loss up to our entry point. So this is a risk-free trade. So we have zero potential of losing in this trade and all the upside in the world to gain, which is the best kind of trade. So we'll see what happens from here. We're basically at the 200 exponential and simple. This was our first main target to the upside. The next target would be either the 236 on the macro or the 786 and measure move. So realistically, we're basically looking for a target of like 2 to 215. Man, excuse me. Next, we got the Flux. So Flux, obviously, the majority of the way through our trade setup as well. Same type of pattern going on. Broke out, retested 200 exponential and simple. consolidated, and then we talked about the entry point being the breakout of our key fib right here. 6.11% breakdown for a stop loss and target of 33.5%. It's already well on its way. Already came up and tagged the 382, which was like our initial mini target. I did not take this trade, but you know, you guys know what I would do. I would immediately move my stop loss up to the entry point. So again, there'd be no risk of downside. Potentially even take profit at key levels like the 382, or obviously at the 0.5 was our initial main target. Same way we talked about the 618 being a potential target, or the 786. But again, looking good. Technical breakout for now, at least. Damn, this has been sitting here this whole fucking time and still has not loaded. What is wrong with TradingView? Is it something with Coinbase? Anybody else like pull up the algo chart and see what the hell's going on? Is it TradingView? Is it Coinbase? Hang on. Let me try a different one. Yeah, I don't know. Something with TradingView. It doesn't want to load any charts up. Is anybody else having any issues with TradingView? What the F, bro? Let me try something else. Man, this is what it was doing before it crashed last time. TradingView. Now, it hasn't had any issues since that most recent update, but yeah, I don't know what the hell is going on. Will not load anything. Yeah, I don't know, guys. If you requested one of the, that's all my fault too for accidentally closing. Yeah, it's working on my other computer too. I have no idea what's going on. I have no idea. I mean, that's my fault for closing the window at the beginning of the stream on accident. So, if you requested a crypto and it was on that list and I didn't get to it, I'll do a breakdown in the trade group. That's my fault for like accidentally clicking out of that right when we started the stream. It's super annoying. I don't know what's going on with it. Won't let me load up any new charts though. Excuse me. Damn, got all kind of issues this stream. This is the raw, unedited. I mean, they're all raw and unedited, but this one's extra raw. I'm like coughing in the mic, burping, closing down windows. Can't get things to load. I mean, this is it, guys. This is real life. What it's like to be a streamer. So gold, reclaim the 821 on the daily, consolidating. Looks okay for now. Got to be real careful of this signature though, where we still have that blue slope line. Come back up, get rejected, and it rolls over. Don't want to get caught in that one. You guys know how that is. And if we just look back in time, let's look at our monthly. You know, this is what we were talking about, where basically it looks like we're going to lose the slope, come back up, reclaim it, and then we end up breaking back down. This looks like a pretty hard rejection so far. Now, we still have 4 days left. We still have 4 days left. And now, remember what all these gold people are saying. Oh, we put in a new intraday high. We put in a new high on the 3-hour time frame. We closed a 16-hour candle above the previous all-time. Ignore all that shit. Pay attention to what actually matters. A daily, a weekly, a monthly. Those are the ones that matter. We don't look at things like, oh, the 9-day is bullish. We got new close on the 7.25 day. Like, stop making shit up. We just got to use what normal people use. And normal people do not use like random shit that they just make up. This right here, potential cross of the stochastics back to the upside on the monthly, and then it got rejected and we broke down from that level. Here we got the actual cross so far, and I don't think that this gets rejected like without the cross and we lose it and it like reprints, but there's a very high likelihood this actually looks like it's about to crosses, and then immediately crosses back down. So I don't want to get bearish on this yet, but to me, this looks like a rejection. You know, we basically have a level, we get up to it, we have a you know, indecision candle, rejection, and then we go lower, consolidate around, try to make it above there, and now it looks like we're close to getting a hard rejection. So we'll see what happens. But if we don't close above this all-time high on the monthly, you know, 2,000 basically, for gold, we almost just got to wait another month and see what happens. We almost just got to wait another month. You know, if you don't have gold, who cares if you buy the all-time high? Eventually it goes higher, but, you know, I'm not trying to, like, get all in on gold and then you got to wait 20 years, 30 years to hit a new all-time high. But if you don't have any position at all, I don't think it's a bad idea. You guys know I look at gold, you know, it's basically car insurance that you get back. Like, you know, you pay your car insurance every month. It's gone, but you're insured in case of an accident. Gold is like, you know, schmuck insurance, government insurance, like, you know, Mad Max insurance. Chances are the world doesn't end, but, you know, you pay your insurance every month anyway. But, you know, you get to keep it in this case. You get to keep your premium regardless. Oh, and remember, guys, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. So it's really important that we hold above this level. We have some key levels that we could break down to on gold that still look okay. 1900, we bounced that once already. 1864, I'd be okay with the bounce there. I think more likely than not, what we're looking for is still what we discussed. This. We have a nice rounding, you know, basically like cup and handle developing. Wouldn't be uncommon to hit the heart line here, roll back over, come back down, put in a new low, people get bearish, then we bounce up here, come back up, get rejected at the high, put in a lower high, and then just consolidate down inside this range for a little while. The same way, remember what I said about the Bitcoin chart too. You see what I mean about the Bitcoin chart now? This is a double top, cup and handle. So we have a bullish trend, and then we break down in a descending channel, and then the breakout is to the upside. Well, the Bitcoin chart is basically a double top by two peaks, but then after that, we come back down and we put in that bottom, and then once we put in the bottom, we start consolidating to the upside inside a channel, and then the breakdown is continuation in the direction of that. So they're in many ways like inverse of each other. So we'll see what happens with that, but yeah, gold lost a key level already. We'll see what happens. I think consolidation is the best thing for gold and silver right now. Silver's back above 200 exponential and simple. Again, we're seeing it roll over, like that typical rejection where we try to come back up. Slope line's blue, starts to roll over. You know, it's a red daily. We'll see what happens. It doesn't have to stay red, but more likely than not, we see more consolidation, probably downward pressure. The weekly gold-silver chart, you know, it keeps looking like it's about to cross the downside. Now we have pushed all the way back up to it. So are we going to avert the cross? Are we going to move back to the upside? We got to wait and see. You know, as far as it looks right now, we got to say that silver looks better than gold. Well, very close to looking better than gold. If this cross back to the downside, we've got to be bullish silver compared to gold. The same way we were bullish silver compared to gold this whole time, and gold to silver this whole time, we got to just trust the technicals. You know, and it's okay if they flip-flop on us, and we got to make, you know, a quick little switch ourselves. Broke down from the slope line. Probably if we come back up, we put in divergence and it fails. And we already had bearish divergence right here, so it's not surprise that this broke down. So pot stocks. So they ended up closing pretty decent after that nice little boost to the upside. We have quite a few trades still in play. The only one that I closed my little scalp position on was Tilray. And it actually looks like a lot more bullish than the rest do. So that's THCX. Still have quite a bit to the upside. 1055 for the target. Already hit the 786 though. We have YOLO. 37% upside target from the 821 cross, which was $14. So still got another like $3 to the upside on that one. That one actually came all the way back down and filled the gap. This one looks a little more bearish. And obviously that's like one of the cannabis ETFs. So this is a potential setup that we put in play for Aurora Cannabis, ACB. So it came up here. We hit the neckline. So now let's see. Does this sell back off and start putting in a right shoulder? If it does, it's actually bullish for a confirmed breakout and a retest up here, but already well on the way to our target. Over 25% to the upside already. At some pretty high levels, though. So wouldn't surprise me if this got tired. Comes back down. Refuels the jet for our push up here. So we'll see. See how much legs this market still got in it. So Tilray, like I said, already took some profits on this. It was up like 50% in like 2 days. Can't be mad at that. So bouncing the slope line perfectly. Hard buy coming out of the bearish control zone. Knife shooting like straight up. Still got some legs on it though. Probably up to like 1030. We'll see. Very bullish on these long term, but probably by the time these things pop off to the upside, they're probably going to have some kind of pullback. And then we got to just load back up when they come back down. Keep building our positions. Keep being responsible. Keep taking profits because we've had a couple of these big bounces that got rejected and went back down. You know, this one went rejected, went back down. But we did have some pretty good notice on these things. I mean, there's been bullish divergence all over the place on these. Hexo already up like 25% from the target. I think realistically this thing's going to like 80 cents because that was like the Tilray options deal that they worked out. So Sundial still looks good, still on target. Tagged our downside target like literally perfectly to the T, 177%. Still in this trade, took some profits already along the way at the 200 exponential and simple and the moving average, or the 0.5 rather. I mean, it's up 100%. It was up 116. Still goes higher though. It looks like came back down, filled the gap. Looks okay. CGC. At resistance now. Definitely underperforming. Came down here to target perfectly though. Once again, well, can't say perfectly. Did wick down below it. Almost up to full 50%. Still have more targets to the upside. Depending when we get there, 200 exponential and simple, quite a bit higher. 1030. Could go as high as like 1272. We'll see what happens on this one. It's probably still got some legs to it. Definitely underperforming. Could easily do that ACB head and shoulders, inverted head and shoulders. Uranium. Okay, so here's our perfect example of what we expect gold to do. You know, it basically consolidates after a move to the upside, consolidates in a descending channel, and then eventually the breakout of the channel is bullish to the upside. And then eventually what was a descending channel turns into the cup of, or I'm sorry, the handle of our cup and handle. And then eventually we get the measure move breakout to the upside. Energy stocks look like they can go either way. I mean, these things are just getting tired. They're obviously like way overplayed, overhyped. I mean, everybody probably that's interested in energy has already got at least a piece of it. It's not like a surprise. These things have been grinding higher. TNX closed Friday, like just with a straight up, just pump to the upside, just absolutely crushing it. Hit our target of 2.5. I mean, literally to a T. I mean, are these markets our bitch or are they our bitch? It's absolutely crazy. Absolutely crazy. Now, keep in mind also, when we're looking at this chart, we have to be careful with this red Fibonacci level because this is made up. This isn't real. And by made up, it isn't real. I mean, this is my hypothetical Fibonacci that hasn't actually... Oh, no. Okay, this one is real. Sorry, that's on a different chart, I think. Yeah, okay. Oh, sorry, I was thinking of the DXY. That's the target from the all the way macro high back in 1981 to the low. So we just went up and literally tagged the 0.5 exactly to a T, which just so happens to be, you know, obviously our target area for this. Now we still have some targets to the upside. Slightly higher is the 886, then 200 exponential and simple. And we have various breakout targets for inverted head and shoulders, cup and handle, etc. I mean, this thing is so bullish. So bullish. Look at that. Just now flipping the slope blue. It's 2 ticks into the monthly, flipping the slope blue. In the bullish control zone, just going parabolic. I mean, look at that candle. You got to be just feeling like the biggest dum-dum in the world. if you were bullish on bonds, just getting your face ripped off like some kind of chump. Man, anybody that was bullish on bonds should have zero credibility right now, right? I mean, you should never, ever want to listen to anything anyone that was bullish on bonds this whole entire time has said, because they have zero credibility. They're literally useless analysts. Anyone that was bullish on bonds, well, they just absolutely tore their face off. After 40 years of being bullish on bonds, if you can't figure out when it's time to not be bullish for a couple months or a year or two, you're, let's say it together now. 1, 2, 3. You're a retard. So is it possible this is bonds bottoming though now, at least temporarily? Yeah, I think it is. I think there's a high likelihood of it. Again, we never sell into support the same way we never buy into resistance. And this was our target, has been our target, and now here we are at it. Now, does not mean we don't go lower, but we should at least see what happens. Because if it goes lower, it's going to go much lower. But chances are it probably just overshot a little bit and it bounces. I have a feeling that the next move in bonds is actually up. I have a feeling the next move in bonds is up. Now, we may get a little wick further down, but I think we get like a 6 to 7% move back in bonds. Now, would I buy bonds? Is it worth a scalp on them? No, there's a million other things, that we could easily make over a 6% scalp with much less risk, because this thing's just, I mean, let's be real. The risk on bonds right now for a little upside potential when, this is our monthly chart. Let's turn off our drawing tools. This is our monthly chart. I mean, this is the worst the bond market has ever looked. I mean, we had like one pretty juicy, thick and juicy candle right here. And this one's worse. I mean, we had one right here, but that was after like a parabolic uptrend. This looks terrible. The bond market is back at 2012 highs. Can you imagine? You're invested in bonds and 10 years worth of appreciation in your principal, it gets wiped out. And I mean, what rates are you getting paid? Probably break even rate, on the coupon. Like, come on, guys. Bonds are just trash. And they're probably not getting any better. Obviously, as we see the yield curve inverting and everything, who wants a bond? Who wants a 20-year bond? Nobody. How about we just buy a 2-year bond and then see what happens? See what it looks like in 2 years or 5 years. Hell no. I mean, weekly chart, again, bears are in control. It's possible that this rolls over. We see like 2 green histograms on the weekly. We get some bullish divergence. We have blue slope line, but we're just melting down through it. I mean, but it could easily print some bullish divergence here. What about, could we get like a decent channel out of this? Is there something here? From that wick? Is there something there maybe? That looks pretty good, actually. Look at that. Would you look at that? Oh, look right at it. So we got a touch right here, a touch right here, a touch right here. And then let's look at our heart line. Obviously, we shot through it right here. Retested our breakout. But then we come up, break through it, and then come back down and find support at 200 exponential on the heart line. Find support at our heart line of both of our channels for a little bit. And then we melt down to now our support right here. So maybe we melt down further. I mean, I have a feeling. Look at that too. Look where that channel lines up with our long-term channel. So this is like double support here, which just so happens to have a green box, which is our actual target. Now, granted, is that just a fluke that it was right there? Or am I just a genius on accident? I mean, I would say probably just a fluke. But realistically, this is telling us that our connection point between these two lows is September 2022 is the low on bonds. Does it have to happen? No, probably not. But I'm just saying, there's definitely some confluence there. So it's probably worth paying attention to. Yeah, I mean, bonds, man, who is bullish on bonds? You got to be a moron. But short term, though, there's probably a buying opportunity there. There probably is. But if you've been bullish for the last 2 years on bonds, you're brain dead. You're brain dead. VIX. So VIX is all the way down at the bottom of the channel now. This is the area that has to hold. So we had obviously the breakout. We wanted that area to hold, and the 200 exponential broke down even lower, heart line. Now we have 200 simple. We have bottom of the channel. This is what has to hold. So this is telling us that if this holds and we get a bounce from here, this is probably the top of the market. And then we see continuation potentially to a new all-time high. If this doesn't hold and we break back down, market's going to melt up, in my opinion. That's good for crypto. That's good for, you know, risk on assets, all kinds of like trash speculations. Kathy Wood in the ARK fund, you know, probably get a little pump out of this. Tech in general. Yeah, we'll see what happens. I mean, we are at pretty low levels. Definitely some bullish divergence printing. Potentially on the daily here. So we have a low right there. We are much, much lower. And it looks like we're running out of steam. Here we have a low. And we have basically a higher low right here. So it looks like we're going to probably print some bullish divergence, but a little too early to tell because it could easily just sell off more and invalidate that. So we're looking for a daily close in the next couple of days with a couple green histograms and a bottom, and then, you know, basically a run back to the upside on volatility. U.S. oil coming back down to support, consolidating. If this holds long enough, it's going to look good. Got to be careful, though. Honestly, I don't want to say that this oil trade is done, but it's probably done, at least for a little bit. So we'll see what happens. Really needs to clear that high right there, or clear the all-time high, or not all-time, but cycle high. This is looking like one of our classic rejections too. We break down, the slope stays blue, we come back up, we get rejected, slope flips red, we sell back off, complete meltdown, go much lower. Looks like it. Dow Jones at resistance, 200 exponential and simple, finally came up and tagged the 200 exponential, or 200 simple for the first time. Finally tagged it. Tagged all of our resistance targets now. So, you know, still in our red box area. Time to just completely melt down. I mean, we're in the bullish control zone though, and have technically momentum in our favor, but I think this thing's getting ready to melt down. S&P breaking out at resistance right now. Have obviously a couple candles right here. Looks much, much more bullish. Looks okay, actually. Reclaiming the slope line. Got to be careful, though. Again, got to be careful, but looks much more bullish. NASDAQ still looks like trash. At resistance. Building up some momentum. Bullish control zone. Didn't even make it to 200 exponential yet. Still hasn't made it up to 200 exponential. What a garbage index. 200 simple, well above our heads at 14,734. NASDAQ looks like trash. Russell still looks like trash. I mean, this has been the worst index for years now. And I don't think anything changes anytime soon. We hit our target to downside. We're trying to push up. I mean, this thing needs a... Can we just get a leg on the Russell for like $70 already? Damn. Bullish control zone, blue slope line. Headed up to 200 exponential on the breakdown. 2132. Come on, Ruddy. Come on, Ruddy. You can do it. XLE, new all-time high close or cycle high close. I mean, above our target. Looks good. Looks pretty good. Got to be careful right here of a potential rejection. We did lose the slope line on the TDMACD. I mean, if we print divergence right here, and this rolls over, it probably goes much lower. So let's see what happens there. But I mean, it's hard to not be bullish on energy right now, but at the same time, it's had a good run. So you don't want to be overly bullish on something after it just rips like it did. XTN, transportation, reclaim the 200 exponential and simple. Looks okay. Best thing it can do here is just consolidate for a bit. We had some nice bullish divergence. We broke out above the 200 exponential and simple. Measure move target is 95. Transportation actually looks okay right here. The longer it just goes sideways here, the better it looks. Because it's at least consolidating above resistance, holding support. XLF, financial, almost back to the top of the range. We just need one more little push up here to like 40. And then I expect a rejection. The markets look like they're at the area where they're either going to top out or break resistance and we go much higher. So this is probably going to be the week to know. I mean, we'll know by the VIX and, you know, essentially Dow Jones and then some of these other little markets, you know. XLC communication, breaking through that red, descending resistance, 821 crossing to the upside, building momentum, blue slope line, bullish control zone. Probably coming up here to test 72. XLP, consumer staples at resistance. 821 crossing. Green slope, I'm sorry, red slope, but green histograms crossing the zero line. Hard buy signal. This thing looks like it wants to run. Descending, broadening wedge. I would look at the horizontals more on this pattern than like a measured move. So I would look at that and then probably slightly higher. So 75.90 and 76.84. I mean, this is like, it's not like we're like trading this right now, but it's that safety play. XLU utilities, very bullish, very strong, all-time highs, crushing. Obviously a safety play if we do go into a recession. XLRE, building up some strength, consolidating between 200 exponential and simple. Closed above it now. Blue slow, positive momentum. Hard sell signal. I don't know. We had some nice bullish divergence. Nice little breakout. Reclaiming 200 exponential and simple. I think this thing wants to push up one more time and get rejected at a lower high. That's what I think is going to happen. 47.87. I mean, again, it's not like this is like tradable range, but VWO, emerging markets, barely hanging on to support, failing to cross 8 and 21, starting to build a little momentum. Looks okay. I mean, these markets look like they're just waiting. It literally just looks like the markets are waiting. They're like, okay, so we had a nice little bullish move. Are we going to go up now or down now? And then nobody's confident to buy and nobody's quite ready to sell because they don't want to get left behind. DAX, same thing. Barely holding at the 821 cross. Looks like these things are just ready to just print massive bearish divergence. They had weak little moves up here, and it took so much energy to get there. All these things look like they're about to print massive bearish divergence. China just rolling over, melting back down, capitulating. Terrible. Looks absolutely terrible. I mean, pathetic, China. Pathetic. UK 100 looks okay. Reclaim that heart line. 821 cross the upside. 200 exponential and simple. Still bullish. Bullish control zone. Bunch of green histograms. UK looks okay. Looks better than most. Brazil still just absolutely crushing it. Looks like it is well on the way to 41.69. Another 10%. I mean, do you buy into the momentum here? I think it probably eventually, maybe it goes all the way up here, but I think eventually it comes back down, retests 200 exponential and simple. Slope looks like it's getting ready to flip back to the upside. So realistically, though, I mean, probably going to 42, 41.83. Brazil. What else we got? DXY, I mean, retesting the freaking resistance once again. So here's an example of what an ascending triangle should look like when it's lining up with the trend and the trend itself is agreeing with the pattern. So we have obviously the bullish chart, a lead in, and then we have a resistance up here, and then a low, depending if we're going on wicks or closes. And then again, we have a higher low right here, or if we're going on wicks or closes, depends how we look at this. But basically, essentially what's happening is we're building support at various levels, and then we have like a flat resistance at the top of the range. Oops. So when we come back up to that, then we have basically like a bullish potential breakout to the upside, and then we get the measure move of the triangle. And here we have a bullish lead in and then a bullish pattern, as opposed to what we were talking about with Bitcoin, where that ascending triangle, it had a bearish lead in and then a bullish pattern. So at that point in time, it's just like a coin toss, in my opinion. But I mean, DXY just looks like a powerhouse that can't be stopped. Dollar's so strong. Everybody's like, oh, but the dollar's trash. Whoa. I mean, depends what you compare it to. If you compare it to oil, yeah, the dollar doesn't look so good because oil's going parabolic. And the dollar's going parabolic, but not quite as fast. Look at the dollar compared to the basket of currencies. It's looking pretty juicy right now. Tesla with that technical breakout. So we can move our target for the breakout, which is just the measure move here. Probably just comes back up. I mean, if it comes back up to there and then puts in another high or a lower high, it's going to look pretty bad. And then it will really look like an ascending broadening wedge. I don't know. It's got momentum in its favor. Elon's talking about buying, Twitter, talking about fighting Putin. I don't think we should have like our smartest businessman, fight Putin. Can't we send somebody else? I mean, no offense, but Elon's got some handicaps and he's a nerd. Putin's like KGB, ruthless overlord. Like, Elon, are you sure you're up to this? I don't know. I think Putin would whoop Elon's ass. If it was a game of chess, maybe I'd give it to Elon. I don't know. Come on, Elon. Can we send Joe Rogan instead? Tesla looks okay. Nancy Pelosi and her husband are pushing it up higher with their options, so just keep following them. You'll do fine. ARKK, 821 crossing to the upside, holding support for now. I mean, barely. God, this thing is such trash. It looks like it wants to run. Who would have thought when I put this price target to the downside that we were going to go lower than $72? Not me. I thought I was being overly mean to Kathy Wood. I thought I was being a dick, and I was like, oh, it'll never go that low, but that is our target. And here we just completely overshot it and just melted down. Massive bullish divergence. Got a nice little pop. I mean, this is so pathetic, though. I mean, I literally saw them talking about how ARK is like pumping and ARK stocks are up 22%. Like, oh, yeah, ARK's up 22%. It's doing great. Well, what is it from all-time high? Down 59%. 59%. It's like the Cardano of, you know, ETFs. God, what trash. SMH Semiconductors. This is the ETF. Reclaiming the 200 exponential and simple. Holding for now. Building some momentum. Looks okay. Looks okay. Barely reclaim some key levels. Hit our target. And then bounce back up. Reclaim the slope of this channel that we broke down from. It definitely looks okay for now. I can't be mad at semiconductors. Nvidia looking juicy. We had that breakout trade. Unfortunately, it broke out so strong here and never retested. We couldn't get a better entry, but you know, you guys know how I felt about Nvidia forever. Still got a little ways to go up here. I think the real resistance is going to be around 291. We'll see what happens there. I mean, again, though, got to be careful with these options-driven, just popular retail names. I mean, if you want to know if this is a real rally or just a reflex rally, look at what pumped and what pumped the most. And if it's all retail like trash, it's probably a rally that's going to fail. And spoiler alert, it's all retail trash. Netflix. I mean, like I said, I have no interest in Netflix. I think it's total garbage until Squid Games, 2 comes out. That's a joke. I mean, this just looks so bad. I don't know if Netflix ever goes back to the highs. Massive gap, potential for upside here, but I mean, it's failing to go anywhere. Everything else is pumping, and Netflix is literally just chilling. It's Netflix and chilling. It's on the couch, getting fat, wasting its life away. Apple, nice little breakout at resistance. I mean, this thing looks like it's probably going to new all-time highs. Again, I mean, this is just complete domination of markets. Apple and, Microsoft isn't quite as juicy right now, but looks really good still. Building momentum, bullish divergence. The breakout on Microsoft probably takes us to 334, another 10% to the upside. I mean, at this point in time, I mean, if you don't want to be like FOMOing into these setups, but I mean, let's be real. There's definitely a setup with a pretty tight stop loss with like a 3-to-1 risk reward. 3% stop loss below like 295, the 200 exponential and simple. Entry right we're at like 303. Target to the upside, 334. 10% upside, 3% downside. I mean, again though, just because if you miss some of these recent trades, don't start FOMOing into them all now. But, it's important we pay attention to these trade setups and the potential. There's our 0.5, which is basically where we're at now. We consolidate here. Break up, it's the 618, the 786. I mean, those look pretty juicy. But this is basically just a double bottom breakout of the neckline. Looks likely. And honestly, if I was going to be trapped in one of these positions, I'd rather it be Apple and Microsoft than like Netflix and Kathy wouldn't want to be. Amazon, reclaiming the 200 exponential, retesting the 200 simple. Again, we've got like a double bottom pattern. If we break through that, we probably retest the top of the range. Amazon going to have some difficulty getting through 35.40. I mean, at this point in time, though, is it really, or is the new 35.40 is really, 37.50? It probably is. That's probably where it goes. It probably does get the measure move breakout right here, all the way back to the top of the range. $500, 15% to the upside. I mean, from where we're at now, not quite. I mean, do you enter here though, or wait? We got to see what happens. I think if it closes above the 200 simple, and I didn't have a position, and I was just super worried this was going to run away on me, I would put the stop below the heart line, and then I would have a conservative target just to retest the highs and then take profit again. 3-to-1 risk reward ratio, stop loss 31.72, target to the upside 37.41. Entry price got to close above 33.24. Want to see it close above the 200 simple. Don't want to just see it wick up, get rejected, and then go back down. Still bearish on Amazon, you know, for an opportunity to buy lower. But let's be real. I mean, you know, again, if you're going to be stuck in some, man, if we go into a recession or depression, though, I don't want to be holding Amazon stock. You know, oh, God. I can only imagine what happened to retail this time around. Absolute decimation. Yeah, that's a risky one. I don't like that. Google, obviously the best platform that definitely does not restrict people based on their views or the things they say. You know, none of that stuff. So they're definitely great. Thank you, YouTube, for allowing us to participate in this stream today. Almighty YouTube and Google gods, if you're listening, which I know you are. You're great. You're the best. 200 exponential and simple, reclaiming those levels, bullish divergence, playing out as we speak. Don't know what that measured move is of because this chart is so sloppy. I'm sorry. It's this, I think. This little W double bottom type thing right here. And that's the measured move. It's got to be. Yeah, okay. This is a nasty, ugly chart right here. Because this is like a weird VW. This is a weird Volkswagen pattern. We've got a W pattern right here with the breakout. I don't know. Probably goes back to the top of the range. 3,000. 3K, baby. Yeah, I think we nailed them. I don't know what's going on. Let's check really quick and see if like it's worked out. I have no idea what's up because I just did an update on this stupid thing. And it was working literally until I closed those charts. So yeah, screw it. Okay, so I'll just do those charts for the trade group. So sorry about that. Yeah, I definitely clicked that right at the beginning of the stream. So let me jump over and chat right here, and then I think we're gonna go ahead and wrap it up right there. Bum, bum. Crypto Salamander says accumulation candle to accumulation candle. Or candle. Accumulation candle to accumulation candle. So I'm assuming that you're foreign based on your spelling of candle. I also don't know what you're talking about, Salamander. But no, I do not see any accumulation taking place. If anything, I see distribution taking place. But I went over that, so. Triple dumps. The old human centipede of triple dumps. TV works fine for me. Yeah, I don't know what the hell's going on with it. Triple dumps. Honkiness says, working okay here. Yeah, it's working on my other computer too. If not too much trouble, can you look at Kava? No, I can't. I can't look at it, unfortunately. But you know that already. But I will post it up in the group. Triple dumps. Whoever you are, you obviously changed your name, but you're a group member, aren't you? I'm assuming you are. Because triple dumps. You could just be a regular viewer. It's not like that's like a super secret inside joke. I mean, these are public streams, but yeah, if you requested a crypto and I did not look at it today, it's literally obviously because of technical difficulties. So I will do a written breakdown and post a chart up in the group in the next like day. Obviously, I'm not going to like immediately do it right after I get off stream after a couple hours. So, but yeah, sorry about the technical difficulties today. You know, the coughing, the closing of the screen, all that good stuff. But definitely at a decision point for these markets. Nice little pump on crypto. Looks like we're probably going to bleed some of this out. We'll see what happens. To me, guys, sure looks like a bunch of stop losses just got hit in a technical breakout. Do we go much higher? I don't know. You know, I told you I'm taking profits. I love to take profits. Love to lock in gains. You guys know that. Lock in gains all the time. Obviously, none of this is financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research. Trade responsibly. We know crypto is directly tied to the stock market. We know the stock market looks like it's very close to probably topping We know the volatility index, VIX, looks like it's bottoming. We know bonds look like they're bottoming. So rates are probably topping. We know the dollar is just an absolute machine. We know China looks like trash. We know UK looks better than most other countries. Yeah, I think that pretty much sums it up for this stream. So that being said, remember this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. It is Sunday, 9:39 p.m. on March 27th, 2022. And that is it for our live stream. Make sure you check us out live on Wednesday, 8 p.m. till 10 p.m. Eastern Standard Time. And then Friday from 11 a.m. till 1 p.m. Eastern Standard Time. We often run over, very rarely run short. Today is one of those quick ones because of whatever the hell's going on with TradingView, not letting me open any more charts. It's probably just mad because I'm just charting the fuck out of this space. It's like, bro, why don't you ever chart us, man? But yeah, we're going to go ahead and wrap it up there. I am Crypto Trend Trader. This is our Sunday evening market look ahead. Make sure to protect your principal, protect your capital, lock in those gains. And most importantly, remember, this stream is for entertainment purposes only. Under no circumstances whatsoever am I recommending that anyone take any of these awesome trade setups that consistently work and make money for me and other people as well. They are just hypothetical scenarios that will 100% never play out, and by no means whatsoever should anyone take any of them. I'm not your financial advisor. I'm not giving you tax advice. This is just for fun and entertainment purposes only. If you should happen to learn something along the way, that's absolutely fan-fucking-tastic. But obviously trade at your own risk. Markets are extremely volatile. And, this is probably one of the hardest times in history to trade and invest in these markets because there's so much uncertainty. I mean, if you literally wrote down all the crazy shit that is happening right now and then, try to draw like a flow chart of what the future is going to look like, good goddamn luck. But that being said, that's a wrap for today. I appreciate each and every one of you. Thank you to all the group members for showing your support. Actually, have not heard back from the last, I think, 1 or 2 people that I was going to let into this next round of groups. So theoretically speaking, if I have reached back out to you and you have not responded yet, you're about to lose your spot. So if there's someone else that's interested in joining the group that is not already, you have a chance to, reverse, jump somebody's spot. So, whoever the next person or two to join is can potentially steal someone's spot. So, and if you're just being lazy and haven't reached back out to me, or I haven't reached back out to you, because that happens a lot of times, and you have reached out to me, now's your chance to reach out to me again. I don't mind if you spam me, as long as you're not trying to get me to pitch some garbage crypto project for you, or help promote your brand, or sponsor, or all these dumb retards that keep messaging me all the time. You people can all go die in a fire. Not literally, but, metaphorically. Basically, just go away. Stop spamming me. I don't want to work with you. I don't want to take your bribes to pitch some garbage project or NFT or whatever it is that you're trying to, trick people into buying into. I do not want your money. But if you want to join the group, though, by all means, reach out to me. So, with that being said, that's it for today. Crypto Trend Trader with our Sunday evening market look ahead, and I'm out of here.